And I'll just kind of go through a couple of the highlights that we had in the press release that was released yesterday. You mentioned the PDP reserves increased 508%. So last year, 2022's reserves were 4.4. PDP value of 27 million this year at a discount rate of 10%. And so that's a direct reflection of the 2023 development program that the team executed under SAP. And what that really means is that it identifies or opens up a variety of different conventional financing options for Prospera, non-dilutive financing options, asset-based debt and so on. And what it allows us to do is get away from some of the higher rate financings that we've done historically, take those out, consolidate our balance sheet, and ultimately fund the upcoming 2024 development program.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm your host, Kerry Lutz, and we are about to get a much requested update from CEO Samuel David and CFO Chris Ludtke of Prospera Energy. Yesterday, Sam, you released your latest reserve report for 2023, and I kind of thought there was a typo. I was looking at it. It said 508% increase in reserve value, PDP, and I mean, I've never seen numbers going up that high before.
That's right, Kerry. Prospera team is very proud and pleased to convey that appreciation of the asset value. And really, I feel we're just scratching the surface on the real asset value of this entire reservoir we have and the oil in place. And we're just beginning to tap into the reserves. We're just accessing the reserves with the horizontals that we just drilled. There's a large upside to this asset value. For example, we haven't really started exploiting one of our largest oil in place property, and we're just commencing that. The reason that it hasn't commenced so far is because we've been doing a lot of due diligence, studying all the technical parameters, historical performance. It is pressure depleted, and we're finding the most effective ways to apply that, and we'll be piloting that this year. So you can see even the largest oil in place property is not reflected in this current appreciation of 508% appreciation in the proven developed value.
Chris, this reserve report really kind of a game changer in terms of how the company moves ahead, how it raises funds. You just tell us, explain what the difference is now.
Yeah, certainly, Kerry. I'll just kind of go through a couple of the highlights that we had in the press release that was released yesterday. You mentioned the PDP reserves increased 508%. So last year, 2022's reserves were 4.4. PDP value of 27 million this year at a discount rate of 10%. And so that's a direct reflection of the 2023 development program that the team executed under SAP. And what that really means is that it identifies or opens up a variety of different conventional financing options for Prospera, non-dilutive financing options, asset-based debt and so on. And what it allows us to do is get away from some of the higher rate financings that we've done historically, take those out, consolidate our balance sheet, and ultimately fund the upcoming 2024 development program.
From an NPV standpoint now, what do you reckon the NPV of the reserves is? All of them, 2P and PDP.
Well, the 2P reserves value that was published yesterday as well was a total of 133 million. That's the corporate number, and that's a proved plus probable number. It increased 61 million year over year. And that's really a reflection of an increase in the undeveloped reserves value along with the 2023 development program.
So pretty much what you're telling me then is that the market cap of the company, which currently, looking at my latest number, is close to 36 million. It's almost triple. Your NPV is almost triple the market cap.
That's right. When we calculate the 2P reserve value over the total amount of shares that are outstanding currently, we get approximately 31 cents, which is considerably higher than where we're at currently. Total proven number is about 21 cents, but both are higher.
Sam, basically looking at this, I saw a current recovery rate of 9%, but the release seems to imply that it could go much higher.
Oh yeah, definitely. There's ample amount of room to be recovered, ample amount of reserves to be recovered. That 9% is an overall average between three properties. As I mentioned, the largest oil in place property, the largest oil in place has approximately 290 million barrels in place. That property has we only recovered about 6% of the oil in place. There's plenty of remaining reserves to be recovered.
This year, we got a drill program that's going to take place, and you've gotten a much earlier start to the process, haven't you?
Definitely. Yeah, last year, everything got delayed till for us to work through. That's the first time we were executing the large development program for Prospera, and it stretched into the winter till end of December. And a lot of that production and corresponding revenue is not reflected in the balance sheet. It will be reflected in this year's balance sheet. But this year, yes, we have paused everything and preparing for an early start right after the breakup to commence drilling.
So we could see that those new wells hit the income statement before the end of the year then.
Yes, since we're doing a much earlier drilling in the summer, the results from the drilling will be reflected in the year-end statement.
Right. So, cash flow standpoint, Chris, companies positioned to finance this program adequately, in addition to perhaps taking on new financing.
Yeah, that's right, Kerry. The additional financing that the reserves will provide, combined with the company's cash flow, will support the 2024 capital requirements and allow us to achieve the year-end targets that have been published earlier this year.
Sam, the reserve life is now 30 years, but we know in the market that once you go past 7-10 years, you don't really get any respect for that, do you?
Well, there's longevity in these reservoirs, and we could have steady stream of supply of oil and cash flow for this company.
Right. So obviously to realize this additional production, you're going to have to do a substantial number of infrastructure improvements. We already discussed technical advancements that are going to be kicking in as the process goes along. It's a big project, isn't it?
These properties have a adequate infrastructure in place. It's a little bit outdated, and we've been attending to that on an ongoing basis. And actually, we have a turnaround planned for this summer. The previous year, wintry conditions affected us quite a bit last year. But this year, we were able to bounce back and resume production and appreciating production from the cold weather. So already there's improvements in the infrastructure, and there'll be additional improvements to infrastructure this summer. And also, because there's existing infrastructure, all the drilling that we do, all the optimization, could be brought online fairly quickly on a quick turnaround.
And easier permitting because it's just additional production in the same project, the same field, right?
These are all multi-well pad lease. And we just say, yes, it's off the same existing infrastructure.
Kerry, I'd also add that helps reduce the capital outlay considerably as well. We're adding these new wells so we get the production right away, but we're not having to spend any money on pipeline infrastructure or anything along those lines. So when we're drilling new wells, we're adding them at roughly about $6 a barrel of capital expenditure, and it's not plagued by additional infrastructure costs that would ultimately bring that number up.
Now that's in Saskatchewan, the heavy oil property. the medium oil development does require some infrastructure, concentrated infrastructure to accommodate the production.
Right. So, Chris, the decline in production that happens in the winter, it's not an isolated event. I mean, I see the chat rooms go a little, they get overreact to the winter decline, but this isn't just a Prospera phenomena. This is industry in this part of the world, right?
Correct. It's across the board. We see our peers impacted in a similar way. Big and small companies across the board. I mean, operating in negative 60-degree weather is tough. But we, as Sam talked about, there's a lot of infrastructure upgrades and things like that and preparedness that happens. There's always events that are unplanned.
You're expanding your team right now, I understand, adding more people, and this can also make an impact. And obviously it helped keep the oil flowing during the winter too.
Well, at minus 62 Celsius, not too many things move. However,
people.
That's right. Yeah, even the people. We have added experienced staff to both operation and production engineering. We also, I think I mentioned before, we have a VP of experienced VP of operation as well. So we have added significant experienced individuals to accommodate the development that we have planned.
So the money is there to do all this, Chris, and the team is there to do it all, Sam. What do you think end of the year? I mean, I saw in the release it said you got a target of 5,000 BOE per day now.
That's right. It's a fairly ambitious target, but we feel it's attainable. And Prospera has come a long way since the restructuring that happened in 2021 onward. But Prospera is a different company now, and there's a cohesive team, management team, an operation team, and we have executed and demonstrated that we're accessing undrained reserves, and we have retired vertical wells all along the way, and we're reducing our operating expense and liability, asset retirement liability as well. And we also have proved up our medium oil play. So here onward, it's mostly execution and development to appreciate production. Also, we have we'll be adding a key strategic acquisition to diversify our product from our heavy oil dependency. And these are all, when we add up all of this, we feel that ambitious target is attainable.
All right. Well, hey, I think really happy to get this update. As you know, I'm a shareholder as well as Prospera being a sponsor of the show, and it's great to see it moving ahead. Hopefully the market will give you some respect in the near term. Once this information gets out there, it seems like it's a good prospect.
We will keep on doing what we're doing, and we'll let rest take care of itself. Thank you, Kerry.
All right. Thank you, Chris. Sam, it's always great to talk with you. Go over to the company's website, prosperaenergy.com, sign up for notifications. The ticker symbols in the U.S., GXRFF, and of course in Canada, PEI. And hey, we'll be going for follow-ups in the coming months, and hopefully everything's going to work out.
Awesome. Thank you.
Thanks, Gary.
The Financial Survival Network.